Hello guys, Stock Saturday, and it's been a slightly outperforming week after sort of last week being a bit poor. This is despite a fairly large drop yesterday in quite a few bits and pieces, but I'm up 3% or about £10,000. So pretty happy with that. No deposits this week. I'm looking to possibly sort of invest a little bit heavy in the next week and possibly make a deposit, but we'll see how things go. So yeah, 3% for the week compared to the S&P's 1.56 and the Nasdaq's 1.17. Not usual to see the Nasdaq sort of underperforming the S&P in a green week. So yeah, a little bit unusual, but yeah, let's have a look at some news. So we had CleanSpark's quarterly report. I will say these are sort of, for the most part, a little bit nonsense, since we sort of know a lot of the numbers, and a lot of the sort of EPS numbers and things are heavily influenced by what the Bitcoin price has done in that quarter. So it's a little bit pointless, but there's certainly some bits in here that aren't in those monthly reports. They're sort of noting that at the wholly owned sites, they experienced wholesale power costs as low as 1.3 cents per kilowatt hour, but that's as low as, very favourable all-in cost of 4.3 cents. Looking at the balance sheet, it's not something you get in detail in the monthly reports, so that's handy. They've gone from 29 million in cash to 323 million, so this is sort of awaiting purchasing some of the rigs, and I would imagine either sort of buying a company or buying land. I would kind of hope they maybe buy a sort of a distressed company, post halving, and they could sort of inject their new rigs into there. It looks like the recent news is they've bought a small pocket of land, so yeah, not ideal. It's going to take 9 months to sort of build facilities and then put the new rigs in, and we're sort of going to be into next year. I kind of like the sort of turnkey approach of sort of buying a struggling miner, although I suppose there would be a bidding war for that sort of thing if it's a ready-made facility that you can just sort of adapt a little and put your new rigs into. So yeah, we'll have to see. Obviously, this large amount of cash has come from dilution, so that's not ideal. Bitcoin on the balance sheet is sort of out of date by now, so don't generally look at that. I sort of update that in the monthly reports, and I will be having a sort of input of these into my model for these and Riot blockchain or Riot platforms, and seeing who looks good. Just looking at debt, they still have almost no debt, 7.6 million of current and 5 million of non-current. So against 300 million of cash and a ton of Bitcoin, that's almost nothing at all. Stock-wise, I may be a bit low on my shares outstanding count in the model. They're at 225 million already, with sort of 300 million authorized. I think I had 230 on my model for sort of later this year, so not ideal. Probably have to up that a little bit, but yeah, there's sort of still hugely bullish projections going forward of Bitcoin being sort of 150, 200,000. So that's way above what I've got in my model. So maybe it could sort of offset that. So yeah, just looking at how much difference this gain on fair value of Bitcoin makes. It's not something that I like to put into my model, but you got to sort of think realistically how Wall Street are going to look into this. Both CleanSpark and Riot aren't something that I'm going to be looking to sort of hold long term. Kind of thinking the bull market in crypto will end sort of sometime next year, whether that's sort of early, mid to late year. So yeah, you have to be looking at sort of how people are going to view these stocks, and they will look at it on earnings per share, net profit, that sort of thing. So yeah, 111 million in mining revenue, and more than that in the gain in value on the Bitcoin. So yeah, 119 million negative expense, if you like. That's adding on to to the income, basically, on a net basis. So they're showing 137 million net profit compared to similar quarter, the same quarter last year, of 17 million loss. And on the 6 monthly, 165 million net profit compared to 46 million net loss. So yeah, maybe this will start perking people up and saying, wow, that's a big net profit number, even though sort of if they dig into it, it's not really sort of income as such. It's a balance sheet item going up. Oh, and yeah, that's not that's operating income, not net profit. So yeah, come down to net profit of 126, 152 on the monthly, again compared to negatives. So yeah, it's something I'll update on my model and sort of project some what we hope for price gains in Bitcoin and sort of include that in. And yeah, let's hope people are starting sort of pricing that gain in, basically. And then we had Equinox Gold's first quarter release. This was sort of not the best. People have taken this quite badly. Stock dropped on the news. I was sort of, it's a little bit worse than I was hoping for, but I kind of knew it wasn't going to be amazing. Equinox is really a sort of second half of this year company. We're sort of looking for the third quarter and fourth quarter results to be sort of looking good. They've got their Greenstone mine, which isn't sort of fully operational yet. They're hoping for first gold pours sort of later this month and sort of proper ramped up production in the second quarter. So yeah, third quarter should look pretty good. Fourth quarter should look very good, is what we're hoping. They've bought the remaining 40% of the Greenstone mine, so they're now getting the full, what we're hoping is 400,000 ounces a year out of that. That's sort of incredibly low all-in sustaining cost. So yeah, fourth quarter should look good, and then really the whole of next year is the one to be looking at really what they are worth. So that is why on the option side, I'm looking at January 2026 expiring options to gain, hopefully, all of this sort of revaluation throughout next year. So yeah, they've obviously the Greenstone mine not being open yet. We're relying on their existing mines, and they've had a bit of a bad quarter. The first quarter of sort of most miners does seem to be a little bit poor. First calendar year, January to March, that is. Sort of various, obviously, weather issues and yeah, just seasonal sort of. That isn't the best quarter. It seems to be better in sort of third and fourth quarter, really. But yeah, 111,000 ounces of gold. That's not very good at all. They sold sort of pretty much that. At an average, I think people are sort of focusing on today's gold price and sort of hoping it would be better. But obviously, average throughout the first quarter was 2,066, which last year we would have thought was great. But yeah, they need sort of another quarter or two to get that number up. Obviously, they still hedge some of it as well, so it's never going to be exactly the current gold price. And yeah, all-in sustaining cost, obviously with this low production number, was $1,950 per ounce. So they're only making sort of just, well, $116 per ounce on that. And then there's, some other costs and tax and bits and pieces. So yeah, it's not very good at all. Income from mine operations of 11 million and a net loss of 42.8 million. So obviously everyone takes to the message boards and saying, oh look, Equinox can't even make gold at these prices, but it's not really how it works. We need the Q2 numbers to come in and sort of the Greenstone mine to bring that cost right down. Even without Greenstone, this is sort of a one-off for the quarter. And then with Greenstone at sort of $1,000, I think they're saying roughly all-in sustaining cost. That should bring that right the way down. They are still reaffirming 2024 production and cost guidance, 660 to 750,000 ounces at I forget cash costs, All-in sustaining cost is what you want, 1630 to 1740 per ounce, which is a little high. Obviously, 2025 will look better once we have a full year of 100% owned greenstone now. So yeah, that'll be better. And obviously, as I say, 111,000 ounces for the first quarter. They are still saying sort of, if you said 700,000, so it is just a bit of a poor quarter in their existing mines, and that should look better. And then add on greenstone, so not bad at all. They do have little recent developments as well. Sort of, it's been a month and a half nearly since the end of that quarter sort of reporting. So they're saying first gold pour for greenstone expected in May, and as I say, commercial production targeted for the third quarter. Yeah, April 23rd is when they agreed to buy the rest of the mine. We sort of know that and covered that. Issued some convertible notes and things. It has pushed the sort of potential fully diluted shares outstanding up quite a bit more than I was sort of had taken into account, but I still think it looks really good. And then April the 8th, they did have a geotechnical event, a bit of a sort of a landslide, and yeah, the Aurizona mine in Brazil has sort of come into a bit of issues. So quarter two production is going to be a little bit hit from that. Obviously, they are still, that is factored into their forecast for 2024. Yeah, they have a remediation plan. They still had ore in the stockpile, so they don't just come to an immediate halt of gold production, and they've sort of commenced mining in an adjacent open pit. So yeah, it's taken a bit of a hit. On April the 9th, the company did draw 60 million of their revolving credit facility. So debt is a fair issue, but as I say, next year's, or sort of later this year's, hopefully high cash flow, and next year's very, very high cash flow, they are showing quite a large amount of deleveraging, quite likely. So they're not going to be sort of pushing that to dividends or anything. They're wanting to get the debt down, which I think is sensible. Just quickly looking at their debt situation, they do sort of seem to focus on net debt everywhere else. I do sort of rather look at the total debt, and they sort of start putting, undrawn liquidity into that as well. I don't like that. So yeah, look at the debt in full. Current debt was 138 million previous quarter. They had none in previous quarter last year, and they're now at 275. This is basically long-term debt becoming current. You can see sort of long-term debt's down from 832, 786 down to 653. So total debt is up a little, up 4 million from last quarter. So that's not a huge deal. And cash is down slightly. So net debt is up from 733 to 803, but that is largely sort of just cash reducing. But they look good, and this quarter should be rather profitable. So Fortuna Silver Mines is quite the opposite. Everything is built and everything is running. So quite a fair amount of net profit. Net income of 26 million for the quarter, compared to a 92 million attributable net loss in previous quarter. So they have been using this money. So it was 84 million operating cash flow, and yeah, they've used that to pay down another 40 million of debt from the revolving credit facility. Close of the quarter, their total net debt was 83 million, and I believe they've paid off a little bit more since. So not too bad. Liquidity, again, don't like the liquidity number. Return to shareholders, so 3.5 million of buybacks. So they don't do a huge amount of buybacks. They seem to sort of prefer reinvesting it and paying down debt, which I do prefer. Gold equivalent production of 112,000 ounces, which is 89,000 of gold, compared to, again, 107,000 in Q4. So everyone sort of seems to have a bad Q1. That's fair enough. Silver production of just over 1 million ounces, compared to 1.3. The silver will go down because their silver side is largely going away, and they're going to become sort of basically Fortuna gold mines. So all-in sustaining cost per ounce was 1,495 compared to 1,509 in the previous quarter. So it's coming down, looking pretty good. Adjusting for San Jose, because they are sort of mining their last year of the silver, it's 1,412. So once San Jose is shut down, they'll be largely a gold miner, mining at an average of 1,412. So pretty good. They are still saying that there's more potential at the Segala mine for expansion as well. And yeah, they're looking to sort of do some drilling and potential exploration, see what they can find. Like a lot of companies, they do put their little debt table in very, very small font, so you have to zoom in because no one likes showing debt. So they've got 125 million on their credit facility. Again, I think they said they have paid a little bit more off this since the first quarter, so that's good. Convertible, 45 million. And then 87 million of cash on the balance sheet. So this is where they keep sort of reporting their total net debt of 83 million. And that last 4 quarters they've made 335 million of EBITDA, which should improve because one of those quarters wasn't so profitable, and they've sort of got the Segala mine still being factored into that EBITDA. So yeah, not too bad, but I do like to just sort of check the full debt against cash rather than just looking at their net debt number. Economic news wise, didn't have too much this week. It was quite a lot of UK news actually. House prices, according to Halifax, up 1.1% on the year, 0.1% on the month. So that was slightly worse than expected, but a fair drop last month. So yeah, not a lot there. Wednesday, so mortgage rates still at average mortgage rate still at 7.92%, same as last month. So people are not switching off standard variable rate, which is unfortunate. People don't sort of become aware of that, and they have to pay this extortionate rate. Thursday, again, the UK got together and decided to keep rates the same. I don't think anyone was expecting them to. It was expected to be all 9 votes to be unchanged. It wasn't actually. 2 did vote for a cut. Obviously, that doesn't change anything. It still stays the same, but gives you a little indication of where some of them are thinking. And then job numbers, the stocks seem to take quite a bit of a move on Thursday with these jobless numbers, but I don't think there was a lot in this. The sort of continuing claims were slightly better than expected. Initial claims slightly up, so not really a lot in that. Fed balance sheet exactly the same. And Friday, UK GDP numbers were sort of across the board much better than expected. So this sort of essentially means UK has come out of recession. There's sort of various reasons, if you dig into it, that could be for, but obviously the headline does put confidence into people's minds, and you can engineer sort of a proper growth, getting out of recession just by announcing that we're out of recession, basically. So yeah, 0.4% for March, 0.2% year on year, but provisionally 0.6% for Q1. So very good. And industrial and manufacturing production much better than expected. We're expected both to be 0.5% negative, and they were in the green. So that's what we like to see. The UK is much more of a sort of industrial and manufacturing nation than America, I believe. We're still basically services, but a little bit more industrial and manufacturing production. And then Friday, I don't know if this had any effect, but it did sort of seem to tie up time-wise. The Michigan Consumer Expectations Survey was sort of quite drastically worse than expected and worse than last month. So this is sort of inflation figures. You know, they're expecting inflation to be higher and sort of general consumer confidence down quite a bit. So yeah, whatever it was that caused it Friday did sort of seem to take a little bit of a knock. Looking at sort of portfolio wise, Stellantis sort of slight recovery, but nothing too much. Broadcom sort of doing quite well actually, back into the sort of low 1300s. Very nice. Taiwan Semiconductor really pushing up again, over 50% green, so not bad at all. Vanguard Emerging Markets still pushing high in the 10,000s, and Prosus, or sort of Tencent basically, is pushing that up. So not bad at all. A little rise from Himax as well. We'll come on to their earnings next week, I think. But yeah, back to sort of still a fair bit down. Got a little bit of FX gain in there, which that doesn't show, but yeah, not too bad for them. And then the sort of miners are pushing on as well with copper price, although I still think people sort of read into certainly Rio Tinto and Vale a little bit too much with the copper price. I mean, they don't do a huge amount of it, so I do think other stocks should get a little bit more love. Glencore gets a little bit, they do a lot more copper, but all three are up. So as I say, CleanSpark and the gold miners and Riot platforms and things were all sort of having a reasonable week, and then took a fair drop on Friday. Bitcoin sort of dropped a little right at the end of the day, but the stocks were already down anyway. Not really sure sort of what caused that, but obviously doesn't change the long-term picture. Bitcoin still sort of rumbling along around after the halvings. Could go on for, a month or two. Wouldn't be surprising. But gold looking very good. Sort of, I would say, divergent strength to the stocks. Sort of back pushing towards almost towards $2,400. So yeah, I still think the gold and silver miners look really good. Coeur mining sort of well above $5. Equinox Gold sort of had a bit of a knock on the earnings. I did put the Stellantis dividend into the ISA and bought a little bit more Equinox Gold on this drop, so pretty good. Fortuna silver above $5 as well, looking pretty nice. Not a lot of move in the REITs. On the interactive brokers side, Pan American looking fairly strong. It had sort of risen a little bit above that, and took a small drop, but looking pretty strong. I will come to their earnings possibly next week as well. And then KGHM starting to sort of really get moving, 28% in the green now. Don't think that includes the FX, but there isn't a lot of FX in there. But yeah, copper prices sort of really pushing, and silver sort of moving as well. I'm not really sure which of those is moving it more. It always seems to move largely with the copper price, but both looking good is why it's sort of one of my most bullish miners, even if it isn't sort of the biggest position. And on the invest side, Chinese tech sort of barely moved. I don't know why I even say it every week, but I'll just leave them there and see how they do. Seem to be doing a ton of buybacks at the moment. On the option side, I wasn't able to adjust these to the exact amounts because I didn't do it last night, and they always seem to do system maintenance. But these are sort of roughly the the positions that I'm in at the moment. I bought about 30 contracts of Equinox. That was it for buys for the week. Sort of keeping my eye on other stuff, possibly Riot platforms for some January 2026 expiries. Sort of having a look at those at the moment. Seem a reasonable value, but sort of deciding between Riot, Equinox, and I was thinking more Himax, but since the run up, possibly not. But we'll see. So all three of those are looking pretty good. Coeur Mining is now solidly the the top spot, unless Equinox has, I mean, Kerr Mining's the top spot without me adding to it, and Equinox is rising with me sort of putting thousands into it. So, yeah, Kerr Mining is sort of the strong player. Fortuna having a pretty strong rise as well. I think, that was just over £1,000 position, and that's now 1,500. So you can see the sort of steady but erratic gains sometimes you can have on these options. So yeah, interesting week. Leave your thoughts in comments below and like and subscribe. See you soon.